Hello there, everyone. So we'll give it a couple of minutes for some people to join, and then we'll kind of dive straight into it. This is quite an important live stream. Obviously, if you guys watched our TradingView post from today, you'll understand that obviously having a bit of a clearer picture as to what's happened in terms of that most recent price action. So now you have a bit more clarity as to what to expect and where to expect price to go next. Also having some clarity as to the fundamentals playing into the most recent price action. But mainly, obviously, we're going to go over the overall picture and bring in and discuss all the aspects that were kind of coming into play now, as there are quite a few of them. So we're gonna start off by obviously we're now in a different form of structure. Obviously, we sent in that Wyckoff update or recording on TradingView, which we will actually go in full detail in this live stream. But we just sent in obviously a YouTube video on Jerome Powell's testimony that was done yesterday. We watched about an hour's worth of it just prior to this. All I would like to say is if you can take the time to actually watch it, it will be very much of use to you guys. We watched, like we said, about an hour into it, and there is a lot of useful information in terms of what the Fed is kind of dealing with and how obviously they're kind of moving forward to the much planned this month. We watched basically the plan is to increase interest rates or the Fed's base rate by 0.25%, so 0.25. Obviously, there was talks in terms of the full 0.5% increase. However, from what I kind of understood, having this whole Ukraine-Russia conflict and obviously the US putting their sanctions on Russia, there is now another element adding to the inflation problem and making sort of the picture moving forward a little bit more unclear. So therefore, the Fed is taking a little bit of a safer approach, and the plan is obviously to increase by 0.25%. Now, the question got raised to Jerome Powell in terms of how the Fed would react and would the Fed be willing to push rates higher, or what's the likelihood of the Fed increasing rates higher than just the 0.25%. Jerome Powell replied with basically saying that depending on sort of the tangibles at that time of that increase, they would be open to increase by more than 0.25%. Obviously, depending on this whole situation with Ukraine and Russia, and obviously just the data points that come out this month. Okay, so we could very much see a rate hike higher than 0.25%. So it's not out of the question. So that's something to kind of bear in mind moving forward, especially towards the end of the month when we get closer to obviously this rate hike. Nonetheless, we will be seeing a rate hike of 0.25%, so that's something to obviously keep in mind. Now, in terms of actual crypto and price movements, okay, we all know, obviously, if you're kind of in touch with what's happening and what sanctions are being placed on Russia, okay, is that crypto, and again, if you watch this, if you watch the testimony, this question gets raised in terms of Russia using cryptocurrency to raise finance due to obviously having the sanctions being put on them. And again, it's something that is very much likely and is probably happened in this most recent pump. Okay, so they're going to be looking for other means in terms of raising finance. Obviously, if they carry on, the worst hit in terms of raising finance is obviously taking them out completely from the SWIFT payments. Once that is done, then they will definitely be in a very much worse position and therefore having to look for other means of financing. Obviously, it's very likely that, or it's likely that the SWIFT payments sanction will be imposed. So therefore, they're already probably placing some steps prior to that, so that they can get themselves in a better position before obviously this sanction gets placed. And then inevitably, if the SWIFT payment sanction gets put in place, then what's the next sanction that they can put in place? And they'll be looking at other means of which Russia are raising finance. And if Bitcoin props up, then I assume they'll do something in terms of hitting crypto in that sort of sense. Okay, so there is going to be a lot of manipulation moving forward. And as you can see, obviously, we will discuss further in this live stream that obviously we're playing within a potential Wyckoff schematic theory or structure, and as you should all know by now, obviously that structure is a structure in which manipulation happens, and a form of manipulation that liquidity is grabbed within a range. So Russians could be very much playing within this and raising up liquidity and money to obviously fund the means of this invasion. So we had a little look over the news outlets. As you can imagine, it's all just to do with Ukraine and Russia. So it's nothing really majorly that we already don't know. So there's no real means as to really touch on that. Again, economic calendar, the data points I've released. Canada raised their interest rate, I'm pretty sure, by 0.25%. It's now at 0.5%. And then it was mainly this week speeches, and the most important speech obviously being Jerome Powell's testimonies speech. But again, so we've sent in that YouTube video to the premium channel as well as the news channel, so it's both available to the premium snipers as well as the free group members. Okay, but again, if you can watch it, even if you break it up into segments, I know it's 3 hours long, but if you can break it up into 3 segments, 1 hour each, that'll be amazing. We watched the first hour so far, and there is a lot of useful information in there moving forward in terms of the Fed's means of moving forward and their approach of increasing interest rates. One last thing to kind of touch on in terms of that meeting is that they are more than willing to increase rates meeting to meeting. So they did discuss in terms of being as nimble as possible and kind of reacting to sort of what's happening at that time. Okay, so it's going to be reactive. So there's a lot of kind of aspects happening right now. Obviously, we got the whole energy prices kind of soaring. Oil prices went up to $112. Brent went up to, I think it was about 120 or so. So obviously there is this huge problem in terms of energy prices that is bringing pressure onto inflation. Housing prices again also bringing pressure to inflation, and obviously a stronger labour force in the US again bringing inflationary problems. Okay, so there's this whole sort of talk in terms of stagflation. Okay, and one point that the Fed or Jerome Powell's kind of touched on is persistent inflation. That's the problem. Okay, rather than just having huge sort of pushes to, well, in terms of spikes of inflation. It's the problem is persistent inflation. It's not really having really high increases in inflation for a short period of time and then it comes back to normal. That's fine. It's the fact that you have increasing inflation or high levels of inflation for a persistent time. That becomes the problem. So that being said, obviously this year is going to be very much a big year in terms of monetary policy and how they react to inflation moving forward. Okay, so it's one thing to kind of really keep an eye on, as that is a huge sort of reason or fundamental that is kind of pushing markets. Okay, so it's one thing to really keep an eye on. With that being said, obviously, we'll kind of dive straight into what's happening in Bitcoin. So one thing that we just wanted to really touch on is obviously the most recent price action. Let's just get rid of these. Okay, so what we want to do is okay, so okay, so obviously we got that huge selling off, right? Okay, so that brought us all the way down to here. In reality, we should have been very much reactive and sort of realised what was going on a lot earlier. Nonetheless, obviously we spotted it before the best entry points in terms of this method or this theory. So we had a huge selling off, right, and a continuation all the way down. This was our last point, right, before we saw this move up. So when we get this last move down, that sets the very much base to the range. Okay, But prior to that, we have the setting of our preliminary support, okay, which is this level just here, okay, so this wick. So we'll type it in. So your preliminary support, so you get your PS, okay, so that goes right here. All right. After that, obviously, we get continuation and another little push down. That is what we call the selling climax. So your SC. Beautiful. Pop that in. Okay. And then we get continuation and we get our move up in terms of setting the very top of that range. Okay. So this is the setting of that top of the range, right? The very top. Okay, and as you can see here, found some sensitivity at this order block just above here, which was perfect. And how we can kind of gauge on this when we get the up thrust, all right? So this is going to be our up thrust here, is that there is liquidity at this level over here. And what you want is to see wicks on the top of the candles, because obviously they're basically capturing liquidity and they're finding resistance and being pushed down because there's selling pressure at these levels over here. All right, so that's exactly what we got both here and here. Okay, so this is what you call your AR, so your automatic rally. So you get a rally from the SC all the way to the top. Okay, so we'll type that one in. Then after the AR, you get another, so what we like to call a secondary test, okay, which comes all the way down and tests, not quite at the very bottom of that selling climax, but just above, which is exactly what we got here. Okay, so this is your secondary test. Perfect. Okay, and then that is what you call the completion of phase A. Okay, so that is your phase A completed. All right. So if we that is your phase A. Okay. After you phase A, so you go secondary test, and then you get a push up higher. Okay, so let's just move that one there. Okay, so secondary test, price came up, came back down, tested this level here, held this level, and then made that push up higher. This is what you like to call your up thrust. Okay, now in the in that TradingView post that we made, okay, we spoke about this potentially even moving up higher. Normally on your up thrust, you want the up thrust to actually break this level over here, okay, capturing more liquidity and then having another very quick rally all the way to the bottom. However, obviously we basically caught at resistance at this level over here, which was the 100 moving average. So there's already liquidity at this level and volume to make that move up lower. However, it's just one thing to obviously keep in mind, that we could still see another push up higher and tap into that liquidity to actually fully complete that up thrust sort of segment to the textbook, if that makes sense. Okay, so obviously we pulled this Fibonacci level over here and we're testing that 382. So if we hold this 382, it's quite likely that we will get that push up all the way to the top. However, obviously, if the more that we pull down to these levels over here, the more that it kind of finalizes the idea that this was the up thrust. But for now, obviously, we'll kind of go with the idea that that was the up thrust. So it is depicted as the UTA. Okay, amazing. Okay, so what are the kind of next steps in terms of after this up thrust is completed? So we get a move all the way down. Okay, so a move. Let's go with. So we get normally a move up and down, okay, all the way all the way down to this secondary test again. Okay, sometimes we can get even just a tiny bit lower. Okay, almost to the same point as this selling climax. Okay, where that is the completion of the second. So after the secondary test, normally there is another secondary test. Okay, and then we get a rebound off that bottom, and then we get another move all the way to the top. Okay, and that really sets, okay, that range. Okay, that's really to confirm what range we are in. Okay, and then what happens is that we come all the way down. Okay, again, all the way to the bottom, and then this is your first entry or potential entry to go long. Okay, so this is basically the best entry that you can really get. That's your first, and then what you get is you get a test. Okay, you get a test over here, and then you get a move up. Okay, you get your LPS, and then you continue up. Okay, I'm just gonna stop right there, and then we'll get a continuation at the top. So let me just go back to where what I was talking about. So we get a move all the way down. Okay, so this is after your up thrust. Okay, you come down all the way down, and complete your secondary test. Okay, secondary test. Okay, normally that secondary test, okay, either comes and tests the previous secondary test, or comes and tests all the way to the bottom to that selling climax. Okay, after that we get another push up or another up thrust, as to speak, all the way to the top. Okay, where it basically really does set in that range. Okay, it confirms that range completely. Okay, and then we come all the way back down, and then this is where we get the spring. Okay, so this is where prices come all the way down, test just below, so they come below this selling climax as well as this secondary test where the liquidity is grabbed. Now, one thing that we wanted to really touch on and emphasize on was the fact that how this selling climax is set up just above the key level that we've been speaking about for weeks and weeks now, which is the 32 to 30,000 level. Okay, and as you can see, they are literally just tweeting just above. Okay, setting perfectly for this spring to literally basically work out exactly how it says in the textbook, is break below the selling climax where there is extra liquidity grabbed. Okay, so it basically entices and starts off more interest. Okay, brings the interest into the charts, into the markets, because now it's pushed down just below. It's gone past the exceeding place of interest. Okay, or the exceeding place of support, where there is plenty of volume to basically spark that interest, that basically boost that buy side volume. Okay, and really kickstart the bottom. Okay, and that is exactly what we're getting, the exact same setup that we're getting right here. Okay, so we come all the way down and we test this 32 to 30,000 level where there is plenty of volume. This is a very much key level on the chart. Okay, so this is what we call the spring. Okay, and this is where basically the buy side interest really starts to kick in and basically gets kick-started. Okay, so this is one entry. This is one entry where you can get in. Okay, and then what you get is you get your test. Okay, and you confirm that bullish structure, and you test this level here where the selling climax is, and the secondary test. Okay, and that is technically, okay, the best entry that you can possibly get in terms of risk to reward ratio. Okay, this is the safest and the best entry that you can possibly get, is this test or retest of this structure over here. Okay, and once you get that test, that basically boosts up demand again. Once we get demand up here, we get secondary demand. Okay, and that really pushes it up higher. Okay, after that you get your LPS, which is your last point of support, which is literally just here. Okay, LPS. Just one thing, just before we carry on, just wanted to obviously touch this. So we got we got phase A, phase B, phase C, and phase D. Okay, so this is phase A. Phase B basically gets completed just before this spring level over here. Okay, so this level just here. Okay, phase C is spring test. Okay, that is your phase C, and then your phase D is the LPS, and then we'll continue onwards. Okay, moving forward. Okay, so so you got phase A, phase B, phase C, phase D, and you have phase E, sorry, as well. So you have your LPS. Okay, your LPS. Then we're gonna have to continue on with this one. Okay, so your LPS makes that push up higher. You get your SOS, which is here. Okay, it comes down, and then what you get here, guys, is, sorry, can I extend this? Yes. Okay, so after your LPS, you get a very big push up. Okay, and after this, you get a push that breaks the structure over here. Okay, breaks the top of that range, and actually comes back down and then retests that level. Now, normally what you get over here is some sort of bullish formation, okay, and then you get a breakout, bam, okay, and then that is your continuation, okay, all the way to the top. But that is basically the completion of your Wyckoff schematic sort of theory, okay, so then this is, so after this you get your last phase over here. Okay, but this point here is called so after your LPS you get your SOS, okay, which is sign of strength. Okay, perfect, which is that break, the break of this top of this range over here, you get that break, which is that sign of strength. Now, then what you get is obviously what we just spoke about, is in terms of some sort of bullish formation, okay, which is exactly what we've drawn here. Amazing. Okay, so you get that flag, that bullish flag forming, okay, and then you get that breakout. Once you get that breakout, you then have your BU, okay, which is your backup. Okay, so it comes back up and it retests the structure, okay, and then we get that continuation all the way up. Now, one thing to just kind of obviously touch on is the fact that we got this very similar formation, okay, back before prices really started to come down. Okay, prices, a lot of the market kind of thought that we were at the bottom. However, obviously there was more to give. Okay, and this spring, okay, when we hit that spring sort of phase, it took forever to actually formalize, and before we knew it, it actually never really sprung up. It just continued down. That's one thing that we really need to keep in mind, that obviously structure, if it doesn't hold and doesn't stick to it after a certain time, then it's not basically playing to that structure. We also need to bear in mind that obviously this is a structure that is that we can all read up on and understand. Now, institutions can obviously play along to the structure and then manipulate traders in the sense of knowing what structure they're playing to, as we are here playing to the Wyckoff structure, and what they decide is literally just to carry it on and then just break off from the structure that the charts are kind of price action telling us. Okay, and then that's one form in which they can manipulate the market. But that being said, this is what you should be playing towards. How it's all set up all the way up to this point here is perfect and textbook to a Wyckoff. Okay, so that is what we should really be looking at. The only thing to kind of bear in mind is this up thrust. Okay, it's not textbook, okay, but it could very much just be enough, and we could just get this secondary test all the way to the bottom over here. But one thing to just bear in mind, if this 382 holds, okay, we could very much see another just rise up, tap into this liquidity at this level over here. Okay, wick down, close just below this AR, and then just have a very fast-paced move or sell off all the way down to form the secondary test, and then obviously move up. So that is what we're playing to. Okay, as of now, we should just really be looking at shorts, especially after this move up here. Okay, we're getting buy side interest, which is great. Okay, which is also feeding into the idea of which once we get this spring and this extra tap into that liquidity at 32 to 30,000, okay, if we get huge interest in buys on this spring level, we can very much, or even more confident, say with more confidence that this is the bottom, okay, and we could be seeing a sort of sentiment change to medium to the long term, okay. But moving forward, obviously, we definitely have a greater deal of understanding as to where the market is going to go and what structure it's playing in, which is obviously very much beneficial. So yeah, that is what we're playing towards. But yeah, so with that being said, that's what we kind of wanted to touch on going into the weekend. Now we have structure to kind of play within and understand, which is always very much beneficial. Okay, whereas up until this point here, it was really just not really knowing where we're going. Obviously, we had the whole Russia Ukraine situation, which was completely negative. However, we're still seeing huge pumps up in the market. Again, another reason to think that Russia is obviously getting involved into crypto and using it as a means of financing. Obviously, we also saw the uptick in terms of funding or helping out Ukraine through donating crypto. So obviously, naturally, there's going to be an increase or a pent-up in demand in crypto due to that. It was in the billions last time I read, so obviously that's going to impact the market slightly. So it's one of those things that we need to keep in mind. Obviously, there's huge manipulation going around, but is also the case of there's a lot going into this month. Okay. Also, it was towards the end of the month, going into March being the Fed's rate hike. Then we get the Ukraine-Russia conflict. It's quite a lot for a market to take on and price in. So hence, again, why we're going to be moving in the range for quite a while. This is structure that we're going to be playing within for at least another month or so. So it's useful just to even catch this at this time. So it's one thing to kind of bear in mind. But yeah, guys, that's about it from us. Thank you for obviously watching and taking your time to clock in. Yeah, we shall see you tomorrow morning. We're going to send out a few more TradingView posts just to keep you guys updated as to kind of what's happened and the current price action. But yeah, stay safe, and we'll see you on the next one. So actually, just before we're going to move on and kind of end the stream, if you guys got any questions, as always, we'll give you a minute just to ask anything that you may want to ask. Apart from that, then we'll kind of end the stream and go our way. Right, okay. Okay, well, yeah, we'll see you tomorrow morning for some more updates, but take it easy, guys.